Welcome back. Let's look at the markets, and I can tell you they've gone off to a roaring start this week. Let's look at Asia first. Closed now, but they rallied this morning our time, extending their gains from last week. Now, this is partly linked to the U.S. jobs report. It's mixed. On one hand, reinforcing confidence in the U.S. Also, perhaps inflation expectations dampened somewhat, which is actually good for us and emerging markets around the world. Also, there's a little bit of a settling when it comes to the trade war nerves, and those boosted trading on Friday and today. Although Friday's tit-for-tat tariffs on billions of dollars of goods by the US on one hand and China were seen as damaging, analysts said the impact could be limited. Eyes are now on the release of Chinese trade data later this week, and China is also welcoming foreigners to invest more on its markets. So all of this adding to the rally that we're seeing. The Nikkei gaining 1.2%. Hong Kong's Hang Seng Index up 1.3% to the good, ending the day at 28,688 points. The Shanghai Composite Index, the biggest mover, gaining 2.5 percentage points. So let's see what's happened on Friday on U.S. markets. The S&P 500 and the Nasdaq rose to their highest levels in a while as strong U.S. growth blunted the impact of that escalating U.S.-China trade war. So jitters calming down. The Dow Jones Industrial rose 1/3%. The S&P 500 gained nearly 0.9%, almost a full percent to close the day, and the Nasdaq Composite adding 1.3%. And it's a good day for our market as well. The JSE showing some strong gains. Naspers, the biggest stock on the market, doing very well. And of course, that's linked to its investment in China. So a lot of optimism around China, that trade war, those jitters calm for now. And also welcoming investors are welcoming China saying, come, invest on our two main stock markets. We may ease restrictions there. The Rand also benefiting from the US jobs data and from general optimism around emerging markets today. The dollar's a bit softer as well. Let's take a look at your main financial indicators. All right, full analysis with Arabile and his guest live at the JSE. Over to you, Ara.
Yeah, good afternoon, Francis. As you said there, of course, a lot of impetus coming through out of China. We did have a massive IPO as well out of China, so that may have certainly spurred the likes of Naspers on because of that 10-cent investment. But let's chat to Gary Boyson, Portfolio Manager at Rand Swiss as well. Gary, thank you so much for joining us this afternoon. Let's perhaps kick off with that news as well. Xiaomi, that big IPO out in Asia as well. How impactful is that said to be, and how much impact do you think that's having on a market that's now gained 1.33% today?
Yeah, so a little bit perhaps on the impact. So Xiaomi, I'm not sure exactly how you say it, sure. But yeah, looking at it, initially it was trading a little bit below the IPO price, and there were some concerns that the trade war is impacting that, and I think the easing of those trade war concerns certainly that's helped to lift the whole market and lift sentiment. I mean, if you look at that IPO specifically, they've also had a couple of issues around listing some scrip. Yeah. They had one of their markets denied as well, and the market not really receiving the idea of moving from very much a mobile phone maker into a more Internet of Things general service provider. So it looks like that script under a little bit of pressure, but overall Asian markets are recovering, and I mean you can really see it in perhaps the copper price, which is a good proxy perhaps for the trade wars as well, because it's they call it Dr. Copper. It's one of those commodities that's used in absolutely everything, and you've seen that under pressure for the last couple of weeks, like really just getting hammered, and we're seeing our first reversal this morning as well. So we are seeing that coming back up. And again, maybe that's also, you know, on a slightly weaker dollar, which has been very firm over the last couple of trading sessions.
Yeah, but I mean, if you take a look at the PE of Xiaomi, it's certainly sitting at around 40. Tencent itself is at 36. It really is expensive at the levels it's at. Is that something you'd get into?
We haven't. I mean, we had kind of the offer out there from providers, so that it is we are able to do it, and certainly, you know, South African clients can get into the listing. The take up has been very, very muted, and as you see, one of the reasons for that is, you know, if you kind of look at the range on where they were pitching, it did look very expensive compared to some of the other internet giants, which are not exactly cheap either.
Yeah.
And it then did get, in the final pricing came in at the bottom of the range, which I think had people a little bit concerned as well. But again, it's interesting. I think everyone is almost spoiled for choice now with the amount of investments that they can look at. And I mean, while this is the third biggest mobile phone producer, it is. Yeah, you know, when you're kind of looking at that pricing compared to owning an Apple directly, or owning something like Tencent, and potentially soon owning, you know, spin-offs of Tencent as well that are going to list in the US. Yeah, I think the demand has been a little bit muted.
Yeah, from one massive equity news to another locally, it's a 25% shareholding that they've now bought. The whole Aton, Murray and Roberts and Avenge saga just continues to square off. Where are we exactly? Let's paint that picture.
So it's a fascinating hostile takeover that we're witnessing at the moment. So, you know, we did see that essentially the Aton bid for Murray and Roberts, you know, was essentially looking a little bit negative. I mean, I think they had moved their bid up to around 17 rand a share. You know, the management at Murray and Roberts is expecting around 20 to 22 rand a share. So that's kind of where the disagreement is. And yeah, Aton very vocal that Murray and Roberts' announcement to potentially buy Avenge was a deliberate move to scupper the entire transaction. Now, what has happened is, you know, Murray and Roberts obviously defended the idea for the takeover, but there has been some criticism from the analyst community as well that this is essentially bailing out Avenge bondholders. Now, what's happened is, you know, Aton has now said, you know, that Avenge was deliberately designed to scupper the transaction, but Avenge did a rights issue a little while ago, and now suddenly the news comes out today that Aton has a 25% stake in Avenge. Yeah. Now, that could be, you know, we're not sure exactly what the mechanism was that they acquired that stake, and it looks like it was probably that rights issue. But essentially what this is going to give them the ability to do is block any transaction, because Murray and Roberts will need a 75% agreement from shareholders, and Aton now has just above that, so they should be able to block any transaction.
So this is checkmate, essentially?
We don't know, because Murray and Roberts has applied to the Competition Tribunal to limit, you know, in the South African context anyway, limit the 44% shareholder block that Aton already owns in Murray and Roberts, has limited their voting ability there, which is always fascinating to me, that, you know, as a shareholder, how can you have your voting ability limited? And now, you know, like, I'm sure the lawyers are going to have a field day on how they can potentially, you know, get involved in Australia as well. But to me, it does look like this takeover is going to go through. And the stated intention from Aton is that they are going to delist Murray and Roberts.
Yeah, this is a better move, however, for the construction sector as a whole. It's really not, you know, as vivid and as grown as it perhaps should be. There isn't any lively action happening in the sector. As I asked, is that really the best move then, to be having a whole lot of mergers?
Now, so looking at it, you know, when you look at the large sort of mega cap, well, you can't really call them, they're micro cap in the context of other you know, other industries, but in terms of the construction industry specifically, those larger construction players, like it's a very difficult argument to make why they should be listed companies, and you know, the argument is that they're going to go after these mega projects. They're going to build, you know, that they need that kind of scale to build enormous you know, buildings and, you know, do those kind of mega projects. But unfortunately, the fact is that the way that the construction industry works, the cyclical nature of the industry, that it is kind of a boom and bust industry, and you know, often public shareholders do get hurt in that environment. So to have these businesses delisted and run, you know, behind the scenes as private investment firms, where it's more about maximizing profitability and there's more, I suppose, savvy investors, is not a bad thing necessarily.
Yeah. Taking a look at the remainder of the week, economically speaking, however, we also have business confidence coming out later in the week. What are your expectations out of that? How much clearer of a picture are we going to get out of South Africa's economy with the remaining data coming out as well?
Yeah, so we've got a couple. So we've got the business confidence numbers. We've also got mining and manufacturing data coming out. And yeah, unfortunately, looking at the estimates and where consensus is sitting, we're expecting kind of more of the same. I mean, we've got, especially with the mining and manufacturing numbers, we got a very, very weak print last time around. It looks like that weakness is expected to continue. And yeah, we're not quite kind of seeing the green shoots of the turnaround yet. And I think confidence is going to remain low for now. And that's, again, going to feed into our GDP numbers as well. Growth isn't there, and I mean, we despite the optimism that we saw at the beginning of the year, things in South Africa are still very, very flat, and we wait for the turnaround.
Yeah, wait for the turnaround. Indeed, that's the message from Gary Boysons from Rand Swiss as well. The market movement in itself clearly doing very well today. However, and perhaps for the remainder of the day, a quick look at Bitcoin, $6,696 for one Bitcoin there, 93,800 for one Bitcoin in Rand terms as well.